All right. Morning, everyone. Welcome to the return of Trading Bitcoin with your host, Tone Vays. Oh, wow. Unconfiscatable was just an incredible event. I was debating, you know what? I should use the background for Unconfiscatable. It will be the last time. I wanted to use Tyler Jenks, who absolutely loved that event. But now that the video started, I gotta change it. I gotta go back to the unconfiscatable. The venue looked very similar to this actually, and the conference was awesome. The carnivory dinner, the conference itself, the Scammy Awards, the last minute put together Scammy Awards was a huge hit. The poker game was a huge hit. I apologize for not having the live stream of the poker game. We had the poker game at a casino, and there were some legal issues with doing a live stream from a casino. Also, a bandwidth situation and connectivity, but it was recorded, and we'll be releasing the video. Maybe not the 6.5 hour full stream because that can be a little boring. We're gonna cut that up. We're gonna release it. The poker tournament was awesome. I can't wait for next year. The event was incredible. I'm a little burned out, but the markets moved yesterday quite a bit. So we're going to take a look at them today. So let's do it. All right. This will be probably one of the last times I showed the unconfiscatable website. As you guys are reading from articles, there was a little bit of controversy that went on. I mean, nothing crazy, but I wasn't really a part of it. I saw it the next day. But yeah, the event was great. We're going to get all the videos up. Right now, the live stream had some connectivity issues, again, due to casino regulations and firewalls. But the standalone videos will go on the Unconfiscatable YouTube channel. Yes, Unconfiscatable is its own channel. We'll get those videos up very, very soon. Working on that. Okay, let's just go to the price of Bitcoin and we'll start there. Not a good start to the week. So a couple of things. Because of the last couple of candles, those of you that haven't watched, I mean, the last video I did is actually banned by YouTube. So you don't even have the last video that I did. That was with Joe Saz. We'll see if Joe Saz comes back to the show because I still don't know why that video was banned. So until I do, I have to put it on hold because see, if I get another video banned, guys, I can't live stream for a week or a month. I'm honestly, I don't even know. So let's see if I get another like banned video because that's bad. That becomes bad. That becomes I can't live stream. If I can't live stream, there's no videos. I'm not going to record and edit. I just don't have that kind of time. So it's either live stream or nothing. That's what happens on my YouTube channel. Okay. So we talked about this chart in my workshop, which took place on Thursday, and I adjusted this trend line. Now that my memory starting to come back here. Now, why did I adjust this trend line? Because if you will recall, my trend line in the past probably looked something like this. And I would have said we have broken the trend line, but here's one of Tone's trend line rules, and I don't like trading with trend lines. One of the rules on trend lines is in order for me to be sure that this trend line is fully broken, I need a candle with a full range. That means the low and the top of the same candle is above the trend line, and that did not happen. Now that we are clearly back below the trend line, we have the ability to adjust the trend line. My rule on the trend line is that a trend line needs to touch the maximum number of candles without breaking any of the candle's bodies. And you can see how this trend line is breaking 1, 2, 3, 4 bodies. So let's see if we can adjust this trend line to avoid breaking any bodies and see if it's still as good. If I move the trend line here, look what happens. All we did was remove one candle from touching the trend line, this one, the candle of the 12th of August. But we now added 1, 2, 3, and pretty much 4 more candles touching the trend line. So you can see how this trend line just got a lot stronger and a lot more significant by touching more candles, while at the same time actually being a rejection. This is what makes it difficult trading with trend lines, because sometimes it looks like it's breaking out, and after it doesn't, you adjust it, and in hindsight, it starts to look like an obvious rejection, okay? And yeah, shout out to Rich. Rich, are you... you did a great job at the poker tournament, man. Playing across from me there at the end. He's usually a moderator in this channel. All right, so the weekly chart is not looking very good. We're not getting that 9. I mean, it's possible we can still get the 9, but unlikely. In order for us to get to 9, we need to rally all the way back above 10,300. And at the moment, sitting here at 9,300, that's not looking very promising. Now, today is today is only, what, Tuesday? So we certainly have time. You know, let me not rule this out. We can still get a 9, but I tell you what, if we do get a 9, it certainly is not going to be a 9 like this that I expect shit to go down. It will probably be closer to a 9 like this, where it's more likely to then consolidate and break out to new all-time highs. If we can pull off a 9 next week, I would be pretty damn bullish into the halving. Like this is now a decent correction. This has fallen at least 10%, I would think. 12%, there it is, right? And while I would like for this correction to be closer to 30%, let me see where that puts us. Okay, 20%. See, this is a good area of support. This is the double moving average. Now, this is a depth cross moving average. Keep in mind, on a weekly scale, this is the depth cross between the 25 and the 50. Now, why am I using the 25? I don't have a good answer. I don't have a good moving average to use on a weekly chart. I've tried 7, I've tried 20, I've tried 21. I'm now sitting here at 25. I don't have a good moving average. I'm also using the 50, which I like, and the 200, which I like, which are classic simple moving averages. And someone's saying check the fibs on the latest move. Maybe I'll do it on the daily chart. So this is a good support point around 8,500. Look, we've been expecting a pullback to 8,500 last week, but it rallied, and now we've broken last week's low. Last week's low was 93.12. This week's low is 92.77. By breaking last week's low and sitting here at a close of candle lower than last week's close, this is a bearish candle, very bearish. So right now, the short term or the intermediate term implication of this is to the downside. Now the upward count is going to break. it's already breaking, right? It can break this week. All we got to do is close at this price or lower, and we've broken the upwards count. Is breaking the upwards sequential count bullish or bearish? I can make the case for both. By breaking the upwards count, you have an intermediate term pullback and then start a brand new count to the upside. That is the bullish case for breaking the count to a 9. The bearish case for breaking the count to a 9 is that we can now begin a count to a red 9, which could be devastating. And many people don't believe we can fall below 6,500. I still believe that we could. And let's just say the probability of going below 6,500 is probably higher than Tone Vays winning the unconfiscatable poker tournament organized by Tone Vays. Okay, with over 60 players. Last year we had 100. This year it was only in the 60s. We moved the game to Sunday. Probably we'll move it back to the weekday at night. And the price of Bitcoin's higher, so the stakes were higher. So some people didn't want to risk that much. All right. I still have that bet with Ran that's coming to an end soon. And I have another bet with a friend of mine that Bitcoin will not spend 90 days above 10,000. We will see how I'm doing on that bet. I will keep track of it. We can see if we put a line at 10,000. So this green line, now that we're on a daily chart, this green line represents where I would be bullish. I think I would have needed a break of this line, and we never got it. So I can actually stick this line at 10,000 because I want to see how many times Bitcoin has closed. Oh God, no, it's counting pennies. I want to see how many times Bitcoin has closed above 10,000. Okay, and we'll make the color of this line something different. This is the $10,000 line. Maybe purple. I don't do anything with purple. No, I'll make it orange. Bitcoin orange. There you go. That's it. That's the line. Now, how many days have we closed above this line? 1, 2, 3, 4, 5, 6. So that's 6 out of 90. 6 out of 90. Closes. All right, why am I not getting any data here? This is the other BitMax, but this one is probably good. So look, the BitMax funding rate is still favoring the bears. It's still positive. Okay, it's favoring the bears. Here's where it was favoring the bulls. Okay, most of the time. So it's favoring the bulls right here. That was at the end of last year. That was here. Now it's been favoring the bears, and we're going down. Now this is it's starting to look like a downwards channel, doesn't it? We'll do it on lower level time frames. Also notice how the sequential on daily Bitcoin called the perfect top. The perfect top right here on daily sequential. Now this daily sequential came a little bit early in the weekly count. But if you're a trader of the sequential system, you certainly should have gotten a heads up, and I'm sure I would have mentioned it, that, hey, sequential is saying this is where Bitcoin's going to top. So the sequential traders would have done very, very well on this right here. This is an ugly looking daily candle. You draw the best fit line that touches the maximum number of candles without breaking any of the bodies. And this was very critical support at 9,572. And I'm going to make this line red. So breaking this support is very bad. Opens up some problems. Now, here's your support line. This support line could hold. Let me straighten that out. That is support at around 8,900. That's also where your 200-day moving average is. If we fall below the 200-day moving average again, that becomes really, really bad because the 200-day moving average has been declining almost the entire time since it turned back in November. Yes, we went above the 200-day moving average, but the moving averages are still not properly aligned. They're not aligned for a Bitcoin bull market. You need the 50 above the 128, above the 200, and they both need to be rising. So right here is where this happened. Granted, the price of Bitcoin was high at 7,000, but this is where the moving averages went bullish. And then Bitcoin just took off. That's not the case here. In fact, right here, it was the complete opposite case, where the moving averages were trending down and each one was lower than the other. We still need these moving averages to cross, and we need the 200-day to start rising before we can declare a clean bull market. If the price of Bitcoin now falls below the 200-day moving average, that's troublesome. The sequential is not helpful at the moment. It's on a red 1, and we almost made it to a red 8. So I'm not, to a red 9 earlier. So this is the thing that I told you on the weekly chart, where I said, hey, what happens when the count breaks? And when the count breaks, I can make the case for both sides. Is it good or bad? Well, it depends, right? When the count broke here to a green 1 price flip, I'm not sure if the green 2 went above a green 1, but there was a chance that this will flip. But the odds are not good. The higher probability is that the trend will just continue, but now the trend resets and it kicks off a brand new count, a brand new setup to a 9 to the downside. So if we get a red 2 going below a red 1 tomorrow, that could be very, very bad. And that we are now looking for 7 more days of downside, or 8 or 9 more days of downside, into a red 9 that never happened here. See how it beautifully tops on a 9? We have a green count to a 5, count breaks. Start a new count, count completes, and ends the upward trend. And now we're going down. So to me, the daily chart has gone bearish at the break of this red line. I guess in the last 24 hours, I was on a flight, so I couldn't bring you a video, and I was exhausted from the conference. But this is a classic example of breaking the support. The sequential has not yet told you to go short, but the problem is I don't like shorting this here, right? So the sequential basically, I don't know if I want to draw a new line or not. See, I like clean trades. Right here, when a red 2 goes below a red 1, that is a very dangerous trade. And I don't like taking the short trade. Look, you're not supposed to short Bitcoin. Let's start there. Let's forget that this is a Bitcoin chart. Let's talk about charting. We're talking about charting, not Bitcoin charting. We're just talking about charting. When it comes to charting, usually this is a short trade, but I don't like the short trade because the 1 candle is so big. So I don't like to go short on an extended market. And you can see how those shorts paid for it. But it doesn't mean that the trade was bad, because clearly we are way lower than that entry from last week. So same problem. If we get a red 2 tomorrow going below a red 1, it creates a very dangerous trade because of how overextended and oversold the market is. So stay cautious. I would rather buy the dip I think this is like going to be the last dip before the halving. And after the halving, I will most likely be a bull. How big is this dip going to be? We're all going to find out. We're going to find out. By the way, I am off to South Africa. I am off to South Africa this weekend. I have done zero research on South Africa. I don't even have a hotel yet. Famous last words, and this is how no one hears from Tone again. If you're in South Africa, maybe leave a comment in the video. I'll reach out. Okay, I want to make some connection to South Africa. I hear great stuff. Off to South Africa this weekend, guys. All right, before I go on to other level timeframes and the S&P 500, the next conference in the Tone Vays organizational system is the Financial Summit in the Dominican Republic. If you are a profitable trader, this is where you want to be. And I mean profitable because this is not a cheap event to attend. There are no discounts. If you can't afford it, you don't belong there. High quality discussions is what we're looking for, okay? There is going to be a fair amount of advanced trading education and networking between hedge funds and traders. I am going to start reaching out to the hedge funds that I know. Da Vinci is coming back. Many people are coming back that were there in Bali. Joe Saz, Socrates. Ooh, not sure about Leah. Willy Woo is back. Ugly Old Goat's back. I believe Crypto Face is coming back. I'm pretty sure he is. I got to check the registrations. I grilled him on Market Cipher and other things at the last event. I'm sure I'll do it again. But it's good. I mean, this is where you get to meet traders. This is where you get to meet traders and funds. Check it out. And I got to get to work on understanding Bitcoin. This event is now 3 months away. Another amazing event. If you don't believe me, just watch last year's videos. Understanding Bitcoin in Malta is going to go down. Okay. All right. Oh, and of course, if you want to support this YouTube channel, please go to tonevays.com. And go to the affiliate section. Go to the affiliate section of tonevays.com if you're going to be using TradingView, or you need a Bitcoin debit card, or you're trading on exchanges, foreign exchanges, domestic US exchanges. It's all here. Please, or if you're going to travel and buy your flights with Bitcoin, please use the affiliate codes. They do help support this YouTube channel. Okay. Let's go to low level time frame. Maybe I can draw a channel here. This is the 4-hour chart. No, this is the 12-hour chart. And the 12-hour chart went bearish in the last 12 hours with a red 3 below a red 2 and a def cross. The 12-hour chart is not that interesting. The 4-hour chart is more interesting. Look at the 4-hour chart again. To the sequential haters. Oh, we were doing this probably during the workshop. That's why you have these little bars here. To the sequential haters. The last 9 was a gorgeous 9 sell just yesterday, February 24th. Right here, we had a 9 buy, which didn't last. It gave you a decent entry off the moving average, and now my stop loss would have gotten me out of that position. The prior 9 got you into a trade that looked promising, probably did not make or lose you any money. Maybe it made a little. The prior to that, the 9 perfectly got you out of the market. Yes, we went a little bit higher on this candle, but it was a price flip candle. Turned out to be a shooting star, and down we go. And the prior 9 also did the same thing. Quasi 9, nearly at the top of the market. The 9 before that, nearly at the top of the market. So track record on this 4 hour is actually not bad. This is a problem. You are a day or two away from some enormous bearish moving average crosses. I'm using the traditional 20, 50, 200. This is an ugly moving average crossover. And the last time that happened, oh boy, you got to go back pretty far. The last time the 4-hour had that kind of a crossover, it was something like this. There it is. See, this was it. This is where both the short term and the intermediate term closed the long term, and the long term was flattening out. This was at 8,600, and it led to a serious correction all the way down to just above 6K. Well, 6.4, so maybe a little more than just above. Similar moving average look. Well, I have to go back pretty far. You know, the 20 will accelerate quickly. The 50 will take a little while. Okay, GBTC. I believe the premium crashed to 20%. It's not as good. Right here is where it was the best, 9.2. Whoa, what happened? I have custom-made formulas to do this. They're not public, but they're very good, and I think they could be better. We're working on that soon. 9.27 is the lowest it's been in the last year or so. Maybe a little lower here. Whoa, down to 3%. Where the hell did I just see 3%? Down to 3%. That's incredible. This one's 9%. And this was down to 9. And now we are down. We were down to about 10. And now we are down. Well, now we're at 20. I'm going to wait till it's sub 10. I'm waiting for that final dip. I'm waiting for that last dip. And then I think I'm ready to, finally going to be ready to go in. I don't care that I'm late. I just care that my retirement account is not going to be down 50%. That's more important to me. CME futures clearly look very different and way ahead on a red 6 versus only a red 1 on the actual market. Bitcoin dominance. Everyone thinks alt season is here. I can't wait for them to get wrecked. Mining profitability. I believe we are hitting this orange line. That's going to be dangerous, right? The only way to hit this orange line in the next 3 months is to go down to 3,000. How likely is that we go down to 3,000 before the halving? I give that maybe a 3 to 5% chance. Another way to hit that line is to go down to 6,000 after the halving. How likely are we to hit that line after the halving? I'm going to say about 25%. I know that's incredibly high. Some people think that is totally insane, but I'd rather be more cautious than sorry. I am still uncomfortable with this bull market. I am still uncomfortable. I will be comfortable if we hit the 200-day moving average after the halving. Everybody panics, and the smart people just hodl through it. I'm still uncomfortable. I would love to be a bull, but I'm still uncomfortable. All right, where are we? All right, this is the performance of Bitcoin versus the top 10 shitcoins. And this little dip has taken the others down. Binance token is still the Binance. Sorry, let me be accurate here. The Binance outright fraud and scam token is still outperforming Bitcoin by 38%. I do not believe that will last. I believe Bitcoin will outperform the Binance illegal security. In my opinion, that it's an illegal security. And what gives me confidence in saying that is that the BSV, outright laughable fraud, is also outperforming Bitcoin since the beginning of 2019. Gold is doing well, or at least was doing well earlier this week, which means yesterday was doing well. Today it's pulling back, which is interesting. Let's look at the daily gold chart. I'm not sure what these blue lines represent because I don't remember what I said in the last video. I'm sure we covered it in my class, and I'm sure I would have told my class that I would be looking to get out on this 9 on Friday, which would have made you look very, very stupid yesterday, but not so stupid today. And I think that gold will pull back to these blue lines. However, the S&P 500 isn't looking too hot. Now, weekly gold is bullish, I think. Weekly gold is bullish, but that is a reversal candle. So let's wait and see what happens going forward. Silver just going to mimic gold. Silver is kind of irrelevant to me. I don't know what this chart is that's loading, so let's see. The difference between me and Peter Schiff is that I understand Bitcoin and the crypto space, and I use it all the time. And I agree with Nouriel Rubini on 99% of his views in the crypto space. Maybe if people understood Bitcoin more and didn't buy into scam coins, people like Peter Schiff and Nouriel Rubini, well, maybe not Peter Schiff, but Nouriel Rubini could be convinced that Bitcoin is not a scam. But when you're looking at, 5,000 scams next to Bitcoin, I don't fault Nouriel Rubini for having the view that he does. So here's the weekly oil chart. Oil is in serious trouble. That is an ugly looking 8 candle. Now the good thing is the 9's coming, and if it can hold setup trend, we can get a bit of a rebound. But I always said oil is going back to $20. I didn't really care how high it got in this run up. I am fundamentally bearish oil. I think the world has a shit ton of oil, way more than we need, and we'll have full renewable energy long before we run out of oil. I can't believe I actually read the conspiracy theory book by Stephen Lieb, When Oil Hits $200 a Barrel. That book is about to be 20 years old, and we never hit $200 a barrel. And now we come to the big gorilla in the room, and that is the S&P 500. Is the S&P 500 going to zero is the ultimate question. So, but while that's loading, I want to take a look at the status of the coronavirus, which I hear is getting worse through the grapevines. Let's see, that was 78 infected. We might be over 100,000 infected by now because, and these are just the reported numbers. I'm sure the real numbers are way higher. I'm still going to Africa, guys. I'll take my chances. Oh wow, only 80,000 since my last refresh. Interesting. I heard Italy has some trouble now. Let me see if Africa's still okay. On our global map. Are we still loading? Africa is still good. No reports. But that could also mean they don't have the medical capabilities of identifying it. So you never know. All right. S&P. The futures are trying to load. I think I have the cash market loaded. I do. Here's the daily S&P. That is a crazy gap. Is it the first time we had a crazy gap? No. We had a crazy gap not that long ago. And guess what happened? The gap closed. Then we went lower, and then we bounced off the moving average. Is the situation different this time? The answer is yes, it is. So first of all, we certainly had divergence right here between this high on a 9 and this high on a 9. Now, this 9 was definitely way better to call the top. This 9 wasn't too shabby either, right? It almost called the high. It was off by, you know, there was a couple of candles a little bit later, making it tricky. Was I bullish on Wednesday of last week? I don't know when my last video was. Would I have been bullish on Wednesday of last week? 100%. 100% I would have been bullish. I take this line, I stick it here. I have a green 2 going above a green 1, going above the 9, making an all-time high. Do I have a reason to be concerned on Wednesday of last week? Absolutely not. Absolutely not. If there's one thing I am, and that's consistent, okay? I talk about hindsight trades. Would I have gone long the S&P on this candle? The answer is 100% yes. 100% yes, I would have got long. When would I have gotten concerned about the S&P 500? The answer is on this red 2 going below a red 1. In order for me to answer the question, would I have gotten concerned enough to get out of the market? And in order for me to answer this question, I have to look at the weekly chart. I don't know what the weekly chart looks like, but I will tell you this. If the weekly chart at the end of Friday was on an 8 or a 9 sequential, I would have probably got out before the gap. If the weekly chart is not on an 8 or 9 sequential, I probably would have held through the weekend and would have been somewhat devastated yesterday morning. So let's go to the weekly chart and find out if there was an 8 or a 9. I honestly don't know. We're about to find out. It was not a 9. Oh boy, it was almost a 9. Look at that. One candle break. So I probably would have stayed in the market. I did not have a reason to get out. Okay. Not for me. I didn't have enough reason to get out. And the gap would have caught me by surprise. I might have had options to mitigate my risk. I might have had some protective puts. I don't know. Until I'm going to be live trading, not live, but I'm going to be trading the S&P 500 next year. This is intended to be one of my last years of full travel. I am done traveling. If you don't see me on a speaking circuit at a conference near you this year, you may never get another chance because I'm tired. I got my own conferences. You come to see us at Unconfiscatable, Understanding Malta, or the Financial Summit. This is why I'm going to South Africa. This is why I'm going to be in the Philippines. I'm going to hit some countries that I haven't been to yet, and that might be it. Okay. So this is also what I sometimes refer to as the spirit of the 9. Those that attended my workshop this weekend, which may or may not have been one of my last workshops, will know what I mean by that. What I mean by that, I hate having one-off candles in a 9 count, because this candle was comparing to this candle and they're so close. So if there was a little more buying at the end of the day on Friday, this could have easily been a green 6, which makes this a green 7, makes that a green 8, and makes that a green 9. How often do I trust the spirit of the 9? Maybe not as often as I should. Let me give you a classic example of where the spirit of the 9 is very useful. As I go to the BLX index and I flip it, the Heikinashi candles are great, but if I flip it back to regular candles and I take us back, you know what? I'm going to drop all of that stuff. These are monthly candles. And I take us back to the bull market of 2013. Notice how the sequential called the perfect top in 2011. And then it missed calling the perfect top at 1200 in 2013. But it had that same spirit of the 9 issue. We had a 9, and then we had a double 9, but it was interrupted by one candle. Now, at this time, Mt. Gox was still the most dominant exchange. So if I go and look at Mt. Gox, load chart layout, if I look at the monthly chart of Mt. Gox, yes, never loaded. What the hell? Let's hope Mt. Gox loads. Oh, what happened here? Oh, did I lose my subscription? It's possible I no longer have my pro subscription. I have the full-blown one because I use this so much. So look at Mt. Gox. Look at how Mt. Gox had a 9 right at the top. And this was still the exchange with the most volume before they kind of went under. So your biggest exchange called the 9 perfectly, but the index flipped this candle. So that's what I mean by the spirit of the 9, where if you look at the monthly chart, this was only a few dollars off from being a 6, which makes this a 7, an 8, and a 9. And it looks like we have a very similar situation here in the S&P 500. If this was a little bit higher by a few points, this would be a 6, 7, 8, 9. Would I have stayed in this trade? Depending on how much I had time to think on Friday. I probably would have been in, and by now I would be already out. I would not be in the S&P 500 right now. I want to stay out of the S&P 500. I am no longer bullish. Didn't mean to close that. I do not want to be bullish the S&P 500. While I could have waited out Monday, this morning with a red 2 going below a red 1 is no good. Oh, so even a 3 going below a red 4. This is a daily chart, right? That was the 2 above below red 1. I would have given this half a day to try and close the gap. And when it didn't, I would be out of the S&P 500. How low can it go? Let's find out. Well, the sequential says, wait for the 9 and buy the dip. I would love to see it fall all the way back down to this vicinity of 3,000. I think 3,000 would be a great buying opportunity, especially if Trump is going to be re-winning the election. So my computer is acting up a little. This is the publication. Oh, one more thing I need to look at. I need to look at the yearly S&P 500. People have noticed that the yearly S&P 500 has a 9. First, let's look at the monthly before we get to the yearly. The monthly is only on a 6. The monthly had its own spirit of the 9 situation. 7, 8, 9, and 10, but we kept going higher, so it didn't do anything. The monthly is not that bearish, guys. Not yet. I mean, we still have this trend line here. So there's plenty of, like, there's no reason to be a bear of the S&P 500. Look at the monthly. It's been on a tear, you know, in forever. And here's the yearly. The yearly is on a 9, but now we need to figure out, let me drop everything else. I can swear I saw someone had S&P 500 back to the 1800s. I don't know who it was, but oh wow, this is S&P 500 back to the 1800s. Oh, that's interesting. Where do you get the data? Let's go to log chart. Oh, I like this. Look at that beautiful sequential 13 at the top. I want to see if the indicator is relevant. Combo 13 unaffected. This 9 here was 1905. Did a decent job. 1900, one of the biggest financial panics was 1907. That was it. I've discussed why it happened on other podcasts. This is interesting. Beautiful sequential 13 in 1929. The combo 13 didn't do anything. The sequential 9 in 1958 didn't do much. But it was consolidation. Another 9 in 67 had consolidation. The 9 in 86, I mean, I told you to be cautious going into 1987, which was one of the biggest single day crashes in S&P. The 9 in 1995 basically did nothing. That's a combo aggressive and sequential on the same day, same year, sorry, which came close to the all-time high in the dot-com bubble. And now we have another 9. I don't know how relevant these 9s are. They don't seem to be that useful. So while we're probably a little overbought, I just can't see a major bear market starting here. I can't see it. Can it happen? Yes. But I am still somewhat bullish the S&P 500. I think this will blow over. I don't think it's another 08 or 2000. The chart that's more interesting to me is the 6-month chart. Let's take a look at the 6-month chart, not 12-month chart. This is more interesting to me. The reason why this is more interesting to me is because we perfectly called the top with this indicator in 2000 and then again in 2008. This is good. And this 9 was ignored. This double 9 was ignored. And we now had a green 2 go above a green 1, and we just had a bad 2 days. Guys, it's 2 days. 2 days. We have bad 2 days. I believe we will hit a 999 on a 6-month chart. This started in January. So that's 2 and 3 is this year, 2020, Trump gets reelected. 4 and 5 is Trump's first new term. 6 and 7, Trump's second year of a second term. 8 and 9, the 9 ends you at the end of Trump's third year. And that's when I think trouble begins. I think trouble begins on the next 9 on a 6-month chart, which means Trump's third year of his second term. We'll get that 999, and we might get a 9 and sequential 13 on the same candle. This 9 combo 13 looked great, but it's already been neutralized by the last 6 months of trading. Okay, I am still bullish. Would I be in the S&P 500 right now? Absolutely not. But I am looking to buy the dip. Looking to buy the dip into Trump's next year. My charts aren't loading, so we can't look at single name stocks. I have to restart my computer. Okay. So this is what I'm looking at. Let's see. Now that we have the data, let's see if we can go back to some. Where is 1987? This looks like 87. Yeah, the 6-month chart for 1987 would have been rough because you had a 9, and this is the reason to get out. But then you had a green 2 go above a green 1 within that candle. Now, if you were able to hold through this 23-day drop in 1 day and not get wrecked, you were okay going forward. Like this 1987 worst day ever is kind of being ignored by the market on a bigger term scale. These 6-month charts, not that useful with sequential. It did not really help you in 1929. It did get you to an 8, close enough, but close but no cigar. Let me put it that way. But I am, ooh, look at that. Beautiful buying opportunity back in 1877. Who was around? Someone's watching that could have been around. I would like to be around for 1977 potential buying opportunity, which is why this may become a health channel in the future. I'm not concerned yet. I'm not concerned yet. Let's go back to the monthly chart. Not concerned yet. Here's the monthly chart, right? I think the weekly is the main one. Let's go back to oh, look at that. Beautiful 9 buy, beautiful 9 sell. That one's not so much. Let me see how the 2008 bear market began on a monthly scale. You had a 9, combo 13, aggressive 13, almost got to sequential, made it to a 12. Big drop, broke the early moving average, bounced back to the moving average, got rejected by the moving average. You didn't have to get out. You didn't have to, okay. Here's my point. Sequential monthly told you to get the hell out of the stock market. Pretty damn good at above 1500. Then combo 13 a little higher. You did not have to get out at 1574. Here's where you had to get out. You had to get out here. Like that's where you had to get out. Right there. You had to get out January 08. when you got a shooting star candle off the rejection. You probably should have got out earlier, right here. But if you held through from October 07 high down into this back test of the moving average, you did not lose that much money. You lost 10%. That is reasonable, and you can make that up. This is where you had to get out. Now, it's nice to get out there, right? But this still looks promising. This is where it doesn't. Now let's go back to 2000. Monthly chart. Sequential, useless. All this consolidation at the top. Everything is still rising. This one is harder. This one dropped. This back test was not very prevalent in the S&P. I'm sure the NASDAQ did a better job, but I can't pull up my other charts. The NASDAQ was the leader here, so you should have watched the NASDAQ. The S&P was the follower. This is harder to get out. Where do you know you're screwed? Probably around here. That's when you know for a fact that you screwed. Before, and especially here, when you start breaking these lows. But prior to that, all this is just another higher low that will probably bounce off the 50-period moving average and go higher. Nothing is scaring me right now. Not yet. On a short-term level, I would not want to be in this market. On a longer-term level, I think there's good support between 3,000 and 3,100. I would look to buy the dip there. But I'm saying that now. When we get there, I could change my mind. The weekly chart is the make or break, right? The weekly chart just now is starting to cross the short period moving average, which is the 20. If it closes below the 20, I would be getting out of all S&P 500, maybe not all. I'm going to use Tyler's system. I would be probably 50% out, and I would put it back in immediately once we start pushing back into this gap. Not enough. Not enough to be a bear. Not enough for me to be a raging bull in Bitcoin, but this is not enough for me to be a bear in the S&P 500. Okay, I can glance at a few of your questions, though this video is getting long. I have a question. So the Dow Jones will hit 100,000 and S&P 7,000. I think those numbers are a little bit high. I think the S&P will hit closer to 5,000. I don't know about 7. Now, again, we are talking about normal inflationary environment. This is under the assumption that the US dollar will not go to hyperinflation. If the US dollar goes into hyperinflation, S&P can hit 300,000. Like, it doesn't matter at that point, right? Under a reasonable amount of inflation, which means a little more than the inflation we have now. Like, I'm opening up the possibility that the Fed will do more money printing. Like under a reasonable amount of inflation of 3 to 5% a year on the dollar or less, I can definitely see the S&P hitting 5,000. Remember, inflation raises the price of private assets, and this is private assets. There's also another assumption that Trump gets reelected. The S&P will not go to 7,000 or 5,000 if a communist gets elected, okay? Or a socialist, or whatever you want to call, or a Democrat. It's not going anywhere, okay? Trump or Bloomberg. If one of those guys get elected, the S&P I expect the S&P to go to 5,000. Okay. I expect Trump to get elected. Now, if Bloomberg pulls off an upset, that's not bad for the market. Bloomberg is also a capitalist. It's not a socialist. Ran the Bloomberg company, which is a private company, right? I see Bloomberg as more of a capitalist than a socialist. That's not how, well, Bernie Sanders flat out calls himself a socialist. And we all know Hillary is, and Elizabeth Warren sure as hell is. So any Democrat gets elected, we're probably screwed. But as long as it's Trump or Bloomberg, I think the S&P is going to be fine. So yeah, it looks like I lost my subscription. I guess I have shit to deal with soon. This is the CME future, and the CME future on the S&P hit a 13, hit a 9. Yeah, but I like the cash market better. All right. You know, Tilray looks very promising, but the whole market crashed. Like, I would have been long Tilray. I think the cannabis sector is getting ready to rebound. Still doesn't look too bad, but I would be out of the market right now. Any other question? The 23 plus trillion debt bubble. There's no debt bubble. There's no debt bubble. The 23 trillion US debt could be 100 trillion. It could be 100,000 trillion. It is totally irrelevant. The US debt does not matter. It doesn't matter. I've been saying it forever. The US national debt does not matter. Repeat after me. It does not matter. Unless there is a country that will come to America with bigger guns to collect on the US debt, the US debt does not matter. It doesn't matter. Okay? I will tell you what matters. US unfunded liability. That is a problem. Huge problem. Don't confuse the US national debt, which US owes to no one. They only owe it to themselves. And if they owe it to another country, they don't have to pay it, because no one is going to come to the US to collect it. So it doesn't matter. Like, what the US does to countries that owe them debt is they say, you better let our companies in your country to set up shop and destroy your local economy. Who's going to do that to the US? Is China going to come to the, is China going to give Donald Trump a call and say, hey, Donald, you owe us $23 trillion. So here's what we're going to do. You're going to shut down your companies. Let's get rid of Google. Let's get rid of Amazon. We're going to replace Amazon with Alibaba. They're going to be here next week. We're going to go ahead and replace Google with our own version of internet browsing. We're going to replace Facebook. Oh, PayPal's gone. Let's replace that with WeChat. Unless you actually think that is going to happen, the US debt does not matter. It doesn't matter. Okay? Stop reading Zero Hedge. It doesn't matter. The US unfunded liabilities, however, matter, because those firemen and those policemen and those hospital workers and all the FBI agents and all the CIA agents and the entire military is going to want their money. They're going to want their money. So that is a problem. And that number, I believe, is close to 130 trillion. That's the number that matters. Stop caring about the US national debt. Irrelevant. No, Bitcoin motorist. Unfunded liabilities matter. The reason they matter is because imagine if every police officer, every military guy says, none of you are going to get health care. None of you are going to get a retirement benefit. What do you think happens on the streets of America if every single government employee ain't getting paid? And some of them have a lot of guns, and they're big guns. Okay? That's the number that matters. It's this is the trouble of misunderstanding of national debt versus unfunded liabilities. Oh, you're being sarcastic? Bitcoin motorist, all right. Tone, do you believe the coronavirus could trigger the next financial crisis? That is a great question. And the answer is, I don't know. I have not thought about this problem. I have not dealt with this problem in my trading career. And I have not read about this problem in my learning and understanding of the market. And I don't know. I don't have a prior use case because we haven't had a plague in a while. So the answer is I don't know. I have to think about it more. I wish Tyler was still alive so that I could, brainstorm on this topic with him. It's a great question, and I'm not gonna bullshit you with a made-up answer. My answer is I don't know. All right, Tesla and Galactic. Let's take a look. Tesla. I may get a chance to buy the dip. Look at Tesla holding up nicely. So this is daily Tesla. People should have known the 9 was coming. You had a combo and sequential 13 at the top, close, not intraday. And there was no reason to be in Tesla. Maybe a little bit. But Tesla gave you enough warning signs to get out, and Tesla activated a short trade on a red 2 below a red 1, and that is a decent short trade because Tesla was so overextended. I know it's crazy to short Tesla. I probably would not have. I might have bought one put option just to get, some skin in the game here. Very dangerous short trade. I probably would have chickened out, but the signs were there. The signs were there. Tesla is still very bullish, but I can certainly see it pulling back to 600, and it may create a good buy the dip. Now let's take a look at space and fake meat. I like looking at fake meat. It's holding up surprisingly well, very well. And boy, I mean, if I held it from the lows, I'd still be holding it. Probably there's really not that scary. But if you just made 8,000%, you may want to take some profit. It still looks bullish, but remember, the overall market is a mess right now. So take that statement with a grain of salt. Let's look at fake meat only because it's right there. The weekly chart of fake meat looks pretty bad. Why is this indicator of a different color? What happened? I don't know. Red 2 below red 1 on a weekly, no good, but it was a beautiful buying opportunity here on a weekly. We'll glance at it on a daily. And not looking good in a bit of a bear trend. I would stay away from it. All right, there's a million other stocks, guys. I can't. Oh, yeah, the currencies. Shit. I haven't looked at the currencies in a while. Now, I can't do this all day. I only got a few days, and then I'm off to Africa. Still got to get my electronic visas. I already got my shots. It was amazing. So I said I might go to Africa if I get my shots done. And then someone, starts going off on me. This is the problem. Everyone's so scared to come to Africa, this and that. And then I went to get those shots when I was in Australia, and the doctor is like looking at the manuals. I was like, oh yeah, you need to get this, or A, they're not going to let you in, and B, you may not be able to come back to America. So now you're literally like globalist. So yeah, it's not a joke, right? Like I got to get these shots or they won't let me into some countries. And then I got to get those shots in order to get back to the US one day. So yeah, it's not that easy. Just go to Africa, no problem. Yeah, there's global regulation that I can't actually get around because blockchain has not yet solved that problem. I do want to look at the euro because I think the euro is a failed currency, which is doing well. Oh, look at those lows. Damn, look at those green arrows. I'm still waiting for euro to go to parity with the dollar. Been waiting forever. The 9 came one candle too early. That sucks. This 9 was perfect. 1, 2, 4 candle correction into the countdown phase. You got the combo. You got the aggressive. And you just need 2 more candles for the sequential. Little correction to the upside. I don't think it's going to last too long. Let's go to the weekly scale. Beautiful reversal candle on a sequential 13. God damn. Marking the low. So to me, this is a short-term thing, kind of like this sequential 13. You know, it happened about a year ago now. No, less than that, 6 months ago. And if I zoom this chart out, I think we're going to go lower. I think the euro is going lower. I think it's going to parity. May take another year, may take 2, may take 5. I think the euro is going to parity against the dollar and then lower. Yeah, guys, I have to get like 3 or 4 shots before heading off to Africa. Well, I'm going to more countries than South Africa. And also got my malaria meds right here. I got to start taking this today, actually. Look at the Indian rupee. Only because I got a good friend that trades it. Wow, this thing looks like it's ready to break out, which is bad for the Indian rupee, right? Look at this. Double top, triple top, quadruple top, weekly scale. A breakout here, I believe, sends the Indian rupee to a new swing low against the dollar. This is not good for the Indian rupee. You know, I don't know, like, when I planned on going to South Africa a few years ago, I was really looking forward to, you know, hanging out with Fluffy. I think I have a reputation to protect. So me hanging out with Fluffy Pony and doing a friendly interview is probably not going to be, it's probably going to be frowned upon by the majority of my audience today. How come you didn't take these shots before going to Bali? It wasn't mandatory based on global health regulation. I don't like to take shots. I don't like to take pills. If the government doesn't force me to do it, I don't do it, right? Like I take my chances. But in order for me to enter some of these countries, and in order for me to exit some of these countries, I have to do it. I have no choice. Or my option is I don't go. British pound. I am more bullish on the British pound than I am on the euro. The question is, am I more bullish on the British pound versus the dollar? And the chart certainly looks more bullish than the euro chart. I think the British pound could rally here. I think it could. It's not a great chart, still in a downtrend, still a bearish chart. No, malaria pills are not mandatory, especially for South Africa, but I'm going to other countries and I am going to try to spend a little time in the jungle-ish area. Definitely do a safari or two. And I got like if the malaria meds start messing with me, I'll stop taking them. All right, guys, I think I'm going to call it a day almost. Maybe one more chart, but hey, guys, if you want to support, please check out the affiliate page of tonevays.com. We have debit cards. You will have to KYC, but it's still a great debit card. TradingView, which I need to sign up for. Maybe I can use my own affiliate. We got some exchanges. We got social trading. We got Trader. This is Joe's big thing. I should have him on the channel again, but the last time I did, we got banned. Brazilian currency. All right, I'll look in a minute. The financial summit. People are registering. It's going to be a hell of a good time for traders and hedge funds, and of course, understanding Bitcoin. All right, I plan to go to Brazil this year as well. Like I told you guys, my last year of travel. Maybe I'm not going to look at Brazil. I'm sorry, guys. Oh, God, I shouldn't have refreshed it. Cancel. BRL, US versus the Brazilian real. All right, let's see what we got. It looks better than the euro, though it's not really a compliment. Oh, wait, I'm sorry. It doesn't look better than the euro because this is US dollar versus the real. No, it actually it does. So I can make the argument for both sides here. I think the real could devalue more, but I can also see it continue to appreciate. I'm neutral here. I have no opinion. I have no opinion. Look at the monthly chart. Maybe it has a clearer picture. Weekly chart, not helpful. See, I don't like this double sequential 13 at the lows, which means the real can certainly depreciate till a 9, maybe 4 or 5 more months. But after that, I think it could, get stronger. So let's try to look at this in about 5 months. Be a much clearer picture. Interesting. So Heikin-Ashi weekly candles on the S&P did a better job. Let's see. All right, I'm an hour and a half in, and I can use some sleep. Interesting. Yeah, beautiful double 9 called the top with Heikin-Ashi. I guess you should pay attention to Heikin-Ashi. I mean, what else can I say? I don't think it's done great at other times. Like, see, that's useless. This was a classic 1 to 4 correction, then up, and this is borderline useless. I'm not a fan of the aggressive, really, to be honest with you. So, I mean, maybe it's something to keep in mind. I like my traditional candles. All right, guys, once again, stay safe out there with the coronavirus, especially if you're in Italy. Well, especially if you're in China, but other than that, Italy. Damn, I was going to go to South Korea this year, too. Shoot. And Japan. We'll see. We will see. Support through the affiliate codes. No more workshops. All workshops are closed. There are no more workshops, but there are on-demand videos. I got to get that options video back up. People have been asking, but I don't normally sell it, so we'll see. All right, guys, that is it for me. I'm calling it a day. Good luck trading out there. Hopefully this video will not get banned by YouTube. And if it does, I will not be able to live stream going forward for at least a week. But if this video gets banned, then my next live stream will basically take me out of YouTube. And then we'll see what happens. I'll see some of you in South Africa. Bye, guys.